Hello, everyone, and welcome to the Friday edition of your Daily 5 for June 5, 2020. I'm Joe Duarte, founder of Joe Duarte and themoneyoptions.com. I'd like to thank you for giving me the next 10 minutes of your valuable time. Today, I want to talk to you about the markets at the edge of chaos. I want to ask a very simple question. As this post-new normal time rolls on, are you ready for what's next? This morning's employment report is a likely game changer as it changes the whole tenor of the market rally from one in which investors were hoping for an improvement in the economy to a scenario in which it now becomes more reasonable to ask what type of recovery we will see. Moreover, it changes the calculus from the Fed's liquidity as the primary reason for stocks to rise to one in which now much of the economy may improve given what the Fed's already done. Of course, no one knows how things are going to turn out, but the trading algorithms that are 80% of the market are now betting that there will be an improvement in corporate earnings at some point, and the stock prices should move higher because of that. So what is this post-new normal thing I'm talking about? Well, let's think about it in two different ways. You have COVID-19, and you have the need for vaccines and treatments. That's not going away. We need technology to help us adjust to this post-new normal period. So we have demand increasing for PCs and laptops. You have enterprise demand for service and bandwidth and networking because people are working from home more. There's more need for gaming, more need for streaming, and more need for online meetings. So that's what the post-new normal world is about in the stock market. So how do we get through these difficult times when the market goes up 500 points a day and down 500 points the next? Well, we have to have those traditional sound trading principles. You stay with that primary trend. The stock market is going up, you stick with owning stocks. You don't want to fight the Federal Reserve. You want to take those profits when you have them. You go up 20%, 30% on a stock, take some off the table. You always look for new stocks with excellent charts and sound management. You want to look at those stocks whose charts look good when you know that management is doing the right thing and the company is heading in the right direction. Manage those sell stops. If your stock goes down 5 to 8%, you don't want to be in it regardless of how much you like it. You always prepare for when the music stops because this rally won't go on forever. So let's start with my favorite chart, the long-term look at the New York Stock Exchange advanced decline line. Again, I look at this as my main market gauge because the algos cannot distort it like they can distort the indices. So quick look here, we have the complexity zone, and that's the area where the market is acting optimally because the forces of the universe are doing all the good things to it. You have a chaos zone down here where things go wrong because chaos, which is disorderly, is in control. Then you have the edge of chaos. I have the 200-day moving average marked as that, but I also like the 50-day moving average as another edge of chaos. The edge of chaos is where complexity and chaos are balanced at the point where good things happen, systems emerge, and stocks break out. So where are we right now? Look at this. The advanced decline line just made a new high, and I'm not talking about a new high for the move. I'm talking about eclipsing the high before COVID-19. So now we have confirmation that this is indeed a new bull market, unless, of course, it's reversed. Now, confirmation is important. Therefore, we're looking at ROC, which measures momentum. Guess what? It just popped out as well. Good confirmation. RSI just reached 70, which means it's starting to get overbought, but nothing to worry about at this point. So let's look at some stocks that should benefit in this post-new normal. This is Anheuser-Busch. And as you can see, Anheuser-Busch was in a terrible bear market. People stopped going to sporting events and rock concerts. So their sales went down regardless of how many six-packs people bought to take home. But look, the stock has recovered. It's above the 50-day moving average, which puts it in the minor complexity zone. It just delivered a breakout. Now, we look at volume by price. This huge bar here is resistance. It's gone. That means the stock has plenty of room now to move back to the 200-day moving average. On balance volume is looking great. Accumulation distribution is great. ROC means momentum. Stock slightly overbought, but still has room. As I expect, it's going to pause here a little bit. Next, this is Agilent Technologies. I talked about this stock 2 weeks ago when I was on this program. It makes the reagents and the machines that researchers use when they're looking for new vaccines and new treatments. Guess what? Stock broke out. Nothing spectacular here other than good common sense. These are the machines that are being used for COVID-19 research. And again, above the 200-day moving average. Look at this down here. Beautiful. 50-day moving average just crossed over the 200-day. That confirms the uptrend. Again, the stock's a little bit overbought now, but that means that we might see a consolidation. Accumulation distribution has just recovered, and unbalanced volume has recovered. Look at over here, volume by price. No big bars. That means that the stock is in a good shape and has very little overhead resistance. Now let's talk about technology. And that's the part that we were talking about earlier, where you have this demand for streaming services and cloud services and everything else. So Intel is a company that makes the chips that all these things work for. The demand for these chips is going to go up. There's no two doubts about it. Therefore, this stock is going to do well. And again, look, it just broke out. Again, complexity zone above the 50-day moving average, above the 200-day moving average, on balance volume, accumulation distribution, showing that money is starting to flow into the stock. Again, volume by price, key. Support level down here is very good. It coincides with the 20-day moving average. Very little resistance above. I want to look at Applied Materials, another technology stock, which should benefit from this post-new normal thing. It's very simple. While Intel makes all the chips, Applied Materials makes the machines upon which Intel and all the other chip companies make all the chips. So if there's increased demand for chips, there's likely to be increased demand for the machines where you make the chips. And so this is a perfect example, as are all the other stocks I've talked about, of companies whose charts are very compelling, but that the company is in a sweet spot because of the supply and demand scenario, because management is doing all the right things. Again, reviewing the usual stuff. Look, volume by price, huge bar of support down here or resistance, which just got taken out. These bars over here are a lot less important than this big bar. That means that the stock has a great opportunity to keep moving slowly higher. And again, accumulation distribution is important. And there we go, starting to turn up. Balanced volume, again, turning up. ROC is lagging a little bit, but the stock is yet not overbought. So let's recap a little bit here. We're living in a post-new normal world, and the market has just given us a great signal, okay? We're moving away from the Fed as the primary cause for stock prices to move higher, and now we're looking for the recovery. At this point, the market is betting there's going to be a recovery, and you have to go with the market. You have to stick to those sound trading principles. You don't want to fight the trend. You don't want to fight the Fed. You want to trade what you see. So if the companies are doing the right thing, the charts look good, then that's where you want to be. Now, I have a little bit of full disclosure here. I own shares in Anheuser-Busch. I own shares in Agilent. I own shares in Applied Materials and Intel. These are stocks I recommended recently at Joe Duarte in themoneyoptions.com. So if you like what you heard here, consider getting a trial of my service. Read my articles on StockCharts.com. I look forward to our next visit right here at your Daily 5 in 2 weeks, and we'll talk again. Have a great Friday.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.